Hi, everybody. How you doing? Welcome to the Stock Markets with Bruce channel. I'm your buddy, Stock Markets with Bruce, Uncle Bruce. I'm your best friend. I might be the only friend you have. You know, the bankers out there are against you. Government seems to be against you. Inflation is against you. I mean, it's terrible. What are we going to do? You need a pal, and maybe I'm your pal. I was thinking about this earlier today, and I thought I'd mention this on my rant. What are we going to do on my rant this morning? And I'll get to that in just a second. I just want to mention a couple of headlines that just came across the wire as I was waiting to go live with you. Non-fuel import prices rose 5.9% year on year. What else is going on here? Retail sales, excluding autos and gas, climbed 0.1% in May. There were a whole bunch of announcements that came out here in just the last few minutes. So I was talking about, we're talking here about, I guess if I get this through here, the ECB. There we go. The ECB had an emergency meeting today, and they're going to try to find a way to calm their markets down over here in Europe, so that we won't get quite so much in the way of wild and wacky swings on currencies and bond rates and interest rates. Gotta say, in Italy, yesterday, we were at 4.2%, I think it was. And we're now sitting, we were sitting as low as 3.7% about an hour ago, and now we just touched 3.9 again. So we're gyrating a lot in Italy. Spanish rates went down today, but now they've gone up again. Now they're coming off. The markets are trying to figure out what the heck do we do? What's really going to happen? And of course, today the Federal Reserve, the United States, is going to announce its latest interest rate target, and we're expecting 0.5 point to a 0.75 point run on that. The the 10-year note in the United States is 3.37%. It was showing 3.5 yesterday evening. So it's a bit lower, but that may not last much longer. Germany had been as high as 177, got down to 163, back to 167, now back down to 163. So we're gyrating everywhere, and it's not a good gyrating. There are, sometimes you can go to a party and you see people gyrating. It's kind of cool to see that. Especially if someone that you're fond of. But other times, it's not good to see gyrating. There are certain people that shouldn't gyrate the way they gyrate. But you know what happens? You put the lampshade on, and it gets out of control, and one thing leads to another. And 9 months later, someone has a kid. Well, I'm just saying. I'm not guaranteeing it. I'm just saying. Okay. In any event. Welcome to the broadcast here today. Trying to get my big ass iPad to cooperate with me. I was having trouble with it. Oh, by the way, thank you to all of you out there who helped me. Some of you were giving me advice on how to fix my iPhone to get it working properly. It's all good. It all worked out. It was my VPN. I have this VPN, and all I had to do is turn it off and turn it back on again on the VPN, and everything is fine. So I don't know. The VPN is defending me against something, and so we're okay. Anyway, that's what I know. Welcome one, welcome all. Thank you for these thumbs ups you're giving me already. I really appreciate it. Keep them coming in if you can. GameStop 127.43, up $1.26 at the moment, but the pre-market volume is 9,300 shares. That's not enough to move this market. The Dow at the moment is positive 213. Over at S&P, we're up 31. And on NASDAQ, we're at 107. We'll see what happens. Okay. Now, getting back to the fact that I might be the only friend you've got. I was thinking of this really this morning, off and on a little bit lately, but I kind of want to mention something. And I kind of want to say it now. For those of you out there who are diehard watchers of this channel, which most of you I know are. A lot of this might not come as a surprise, but some of it might. For those of you who have been here for a little while. You may or may not catch the drift on this, but anyway, I'm going to make this as plain, as simple as I can. I believe that the economy is going to react not nicely, negatively, no matter what happens. There is nothing that the Federal Reserve of the United States can do. There's nothing the European Union, the ECB, the central bank of the EU. There's nothing they can do. Bank of England, Bank of Canada, no government. There's nothing they can do that is going to protect the world economy from likely going into a pullback. Now, I don't anticipate that the world economy is going in for a major recession, depression, anything like that. The reason I believe that is because there's so much pent up demand for basic goods. People are waiting weeks and months for patio furniture, doors, garage door openers, barbecues, bathtubs, fridges, stoves. There are stories out there of people who go to their Home Depot store or Lowe's, and they want to buy a set of kitchen appliances that have kind of the same color. Nothing too elaborate. Just want the same color, and then they have to wait weeks and months for this to come in. Supply chain problem. So that kind of underlying demand for a lot of basics keeps us away from a really cataclysmic uh, pullback in the economy. Now, on the other side, the bad news: inflation is rising. Inflation is still here, and a lot of people are noticing it in depending on what it is they want to do. We've been talking for 2 years about how car prices have been ridiculously high in the US and Canada, where certain dealers are charging above sticker for vehicles. I mean, used car values. We've had viewers on this channel, I think Duncan right here, is telling us, selling their used cars for way more money than they thought they would ever get. Uh, that kind of thing. So we already know about certain inflation that has been some of us have been able to take opportunities for. Jennifer and I sold our house. We're happy with the price we got because that house was no way appreciating in value for years prior to when it finally did. So there's, I guess, good inflation and bad inflation. It all depends on whose side you're on. But now there's the grocery store inflation, the clothing store inflation, I just went to McDonald's and it cost me more inflation there. That inflation, which is eating us alive. And then there are those of you out there who are working for an employer, and your employer is giving you a 6% raise, and you're noticing that after tax, what's left over, you're still spending more than that. The amount you just got, the extra amount you got, is not covering the increased prices you are facing, and you are losing the race against inflation. And this is what happens all the time through recessions and interest rate and inflationary bumps. This was normal in the 70s and the 80s and the 90s. As I became more of an adult and moved along in my career, it just became so obvious that every year we had to find ways to get more money in our pockets to keep up with the Joneses, just to stay even. And this is happening now for a lot of you out there for maybe the first time as adults. The last time this happened, some of you may have been infants with your mom and dad handling it at that time. But here's the point I want to make. Again, why am I your friend? I have a suspicion that what might be going on here is another. There's another thing happening on top of everything else we've been dealing with, dealing with COVID, dealing with the lockdowns, dealing with working from home, dealing from noticing that our world has gone completely digital, noticing that people are now many more people are gig workers. do you notice in your hometown, by by the by, do you notice where you live at supper time every day, how many people deliver food to people at their home? Is that not amazing to you? Here in Vienna, um, all kinds of people on bikes and on scooters delivering food. They've got these, these, they look like backpack straps in the front, but on the back they've got a square cube full of pizza or burgers or whatever, and they're heading off to deliver food. This Uber Eats and this whole new ecosystem. All right, the world has changed completely in the last several years. That business has taken off in the last 2 years because of COVID, and it's not going to go away. What 30-year-old, 35-year-old who has a decent job is not going to keep ordering food through Uber Eats? They're going to keep doing it. They want to be at home playing their video games or hanging out with their friends or working from home, and they'll have a pizza delivered to them by whatever. And Pizza Hut or, you know, whoever, even McDonald's is doing it. Here in Vienna, it's anybody. These restaurants have bought into it. It's their lifeline for survival. This isn't going away. All right. So we've seen the transition of the world in the last 2.5 years, and it has moved us forward by a decade. Now, here's what I'm thinking is coming next. Okay. I'm trying to read into the future here. And what I think is happening, or what might be happening, is we were under the impression, a lot of us, that coming out of the COVID, that the economy would restart and we would try to go back to normal. And going back to normal would mean more jobs being made available and more of us being called back to work. And some of that has happened, sure. But what we're seeing is the kind of jobs we're seeing being offered are these driver delivery jobs, the restaurant jobs, the service industry jobs. We see these being offered all over the place. And now I'm beginning to sense, little by little, more and more of people like yourselves or friends you know, associates you're familiar with, former coworkers, especially some of you with your relatives who are a bit older. You're probably noticing the 55 and 65-year-olds, and certainly even 50 and up. Many of these folks are possibly going to be laid off in the next year or two, because I get the sense that business has decided, corporate world, not every single company, by the way, I'm just generalizing, okay, but corporate Canada, America, corporate Europe, they're figuring out, look, change is the new normal. Everybody is into it. Everyone accepts it. So now we can make major changes in our organization, and it's not even going to raise an eyebrow anywhere anymore, because it used to be that 5-8 years ago, if we announced a layoff of 15% of our workers or a complete redo of whatever it is we're about, this would create unbelievable headlines. Well, today you could shut down a third of an office and no one even blinks anymore, because everyone assumes, well, you're just putting jobs at home now. Well, what I think is going on, and what I think might be happening, is a continuation of what we saw begin in the 90s and the 2000s, where many of you, I might be wrong in this. Again, you're younger than I am, so you may not have been around for this. You were probably very young in your work career when this began. What happened back in the 90s and the 2000s, and I think it's about to take off big time, was where people in North America and in England, Canada, and other places, the G20, we had to start training people to do our jobs that were ultimately going to do our jobs from a third world location. So we began to notice India showing up all of a sudden with call centers. We had technical support centers opening up in Bangladesh. We had all kinds of other centers opening up in Indonesia, Philippines, where the cost of being in business on a relative basis is pennies on the dollar compared to the North American wage. And we began to notice that jobs and certain types of jobs were disappearing in North America and were popping up over there. Now, for corporate whatever, it's a smart move. I mean, if you're a corporation, you're publicly traded. Every 13 weeks, you've got to report earnings to your shareholders, to the market, to all those bankers that you've been borrowing money from. You have to show progress. And the progress has got to be either you sold a whole bunch more stuff and made a bunch more money, or you sold a little more stuff, but you cut your costs and you made more money. Or you sold a little more, cut your costs, but you bought back a bunch of your stock and your per share earnings are higher. So that means the shareholders are making more money. But somewhere in there, and it's step number two, you laid off people in North America. You laid off your 40, 60, 80, 150, $200,000 a year, middle of the pack group, the ones that will never see what we call the C suite, the corporate suite out the top 5% of the company. These folks down here will never get there, ever. And so what they're trying to do is get as high up as they can on those lower floors to make it go for them. The head honchos up there are being told by outside analysts that they've hired in, or that they've hired, and kept out of the office so that no one in the office knows what's going on. The top guys up there, the top guys and girls, are being told, yeah, you could probably lay off 15% of your employees and replace them with third world people at fractions. And I'm not, and then on top of that, they're saying, and we're not talking about getting rid of the mailroom people and the low rung. No. We're talking core, middle of the company, and higher. In other words, there are supervisors you have that have been here for 25, 30 years that you can get rid of now. They've been here, they're 55, and they've been here since they were 25. And they're costing you a fortune because they've earned it. They've earned a raise every year. They've earned promotions. They're guiding 10, 20, 30, 40, 50 people. I mean, they're close to the C-suite. They're not going to get there, but they're making moolah. But the other problem with these people is that they're 50, they're 55, they're 57, they're 59, they're 62, they're 64. Guess what? They are starting to get health issues. And these people are going to start costing us a lot of money, especially the health plan we have. Our corporate health plan is going to get decimated as these folks become more fragile. What do you want? We get old. It happens. It's nothing personal. So if an outside entity can tell the corporate management, look, to stay on top of this game of yours, all your competitors in your business, and whether they're based in the same city as you are, the same state, the same country, they're all doing this in their own way. And they're now bringing in outside help to handle the kind of work that used to be done by home-based people. This happened in the 90s and the 2000s. Okay, I'm still telling you about history. There were stories and stories and stories for years and years and years where first we heard about the Rust Belt thing. We heard all about how car factories got shut down in Ohio and Michigan and Illinois. And then we started to hear this story that I'm telling you about. Outsourcing. And the outsourcing began to happen, and it took off. And how many of you and I and others are trying to get something resolved with a company? And what do? We dial the 800 number, and what are we calling? A call center in where? A third world country. And we're dealing with someone who is either a very excellent English speaker or not, but they have limited powers to what they can do and what they can't do. And, we're frustrated by it. Okay, that was then. Now, today, what's happening today? Here we are in 2022. We've just come through 2 years of hell for the whole thing, the whole global, pandemic thing, and corporate everybody is still trying to figure out how do we survive the next 2 years, the next 5 years as a corporation against all of our competition. Are we still on the cutting edge of changing and transforming our business? Because we had to allow our employees to work from home. We had to help them work from home. We never thought we'd ever be in that position. So the major corporations in the United States, Canada, Britain, and Europe never, ever were going to do this. They were never, ever going to think of this. Maybe a decade from now. But in like 2 years, the entire office is closed, and the entire admin feature of our business kept on going. We never knew we could do this. This is really unbelievable. The only other thing that could have made this happen, other than a pandemic, would have been perhaps a war where, we sent a whole bunch of people off to fight somewhere. And those left behind got to work from home because we can't put them in the offices. They're targets. But the pandemic changed everything. The problem is this: corporate America pays attention. Corporate Canada, corporate UK, corporate Germany, they don't forget this stuff. And yeah, there's some of you out there who watch me all the time saying, you know what, Bruce, I'm loving this. I love working from home. I'm really happy working from home. This is what what I really live for. I get time for my kids. we don't need we don't need a we don't need daycare anymore between my wife and I. This is fabulous. Yep, it's good. But these corporate entities are also going, well, as a company, we don't need to hire back as many people as before. And we can keep a lot more people out of the office. And on top of everything else, we can now engage the services of human resources professionals to assist our corporation to, quote, re-staff our company. Since most of our company is not going to be hanging around the food aisle and the water cooler anymore, our employees are now remote. They don't have to be remote in and around Pittsburgh or in and around St. Louis or in and around Los Angeles. They can be remote anywhere. I mean, look at Uncle Bruce. He's remote from Vienna, Austria. I mean, come on. If that old fart can do it, so can we. Why don't we engage our human resources department and say to them, look, take a look at our employee base, take a look at the experience that our employees have, take a look at the functions of their job, take a note of the kind of work they've been doing at home now for upwards of 2 years, and tell us whether we can maintain the talent we have or upgrade the talent we have with a worldwide hiring map rather than just in town. Because remember, in Milwaukee, if a company did 2,500 layoffs, 2,500 people in Milwaukee lost their jobs. Down the road, if a company in Milwaukee lays off 2,500 people, those are worldwide layoffs. They're not in Milwaukee. That's what's going to happen here. And so for the city of Chicago or New York or others that have massive amounts of money put into their transit system and have these gigantic towers, this is bad news, because the theory is that investment bankers in New York who work for New York-based firms won't have to commute into New York anymore to do their job. They can live wherever they want. And they can live in the USA, they can live in Canada, they can live in Vienna, Austria. Are you happy working from about 2:30 in the afternoon, which is 8:30 Eastern time, until 10:30 at night, doing your thing? If you're happy with those hours, you're more than welcome to join our firm. Now, what I'm getting at about I'm your only buddy, there are a bunch of you or people that you know that are going to run into this buzzsaw that's coming at you. And some of you are hearing the rumors already. You're beginning to hear the rumors that if there is going to be a recession, an economic pullback, a slowdown, a whatever you call it, that is the excuse that your employer is going to use to get rid of you or others like you. And I'm thinking anyone 40 and older is vulnerable. And the reason I say it is it's not personal, it's business. If you can bring in a 33-year-old Bangladeshi employee to do your job, and it costs the company $16,000 a year, benefits in to hire that individual, and they can get rid of your butt because of it, you do the math. I'm not saying you're a $200,000 a year person. You might be a $45,000, $70,000 a year person. The savings for corporate America, for corporate Canada, for corporate everywhere, when you deal with millions of positions, I'm not talking a couple 100,000 here. We're talking years and years of changes. We're talking about trillions of dollars of wealth transfer, of job transfers. And a number of you, I'm crossing my fingers, will be in a position to be offered a buyout that will be too good to pass up. Or you're going to look at that buyout and go, well, in past years, this wouldn't have been enough to accept. But you know what? Watching Uncle Bruce on stock markets with Bruce, I can take this settlement with all the stock I've earned and the buyout I'm getting. I can write options and I can replace my income with option income, and I don't have to work again. Or some of you who just want to keep on going, you'll find work with another company, but you'll be writing options at the same time because you got the buyout. So you added that to your arsenal. You found another gig, which is from home, and now you're writing options and doing your job, building your wealth even faster. Whatever works for you is fine with me. What I'm trying to say here is to those of you out there who are now in your latter part of your careers and in the corporate world of America, if you are 50 and older, you are in the crosshairs of employment firms to be eliminated from existence from corporate America. I'm telling you straight out, 90% of you are in trouble, could be in trouble, might be in trouble. 10% of you will get away with it because you're irreplaceable. Your experience is so high that they're not going to even think about it, or you are an income generator. If you're an income generator for your company, you don't have anything to worry about. You have to travel, or you have to do the Zoom calls, you have to do this. And every time you come in the office, you're a problem solver. You're the lightning bolt of ideas that solves problems. You score large contracts. You're fine. But if you're in admin, you're in that level, and you're assisting these people, you're vulnerable. And this is where it gets dicey. So I'm saying to you all out there, I'm your buddy. I might be the only friend you have. First, I want to give you the heads up. This is probably coming. It's only a matter of time. It happens now in the next few months because there's a recession coming, or interest rates will be so high that business will pull back, and then corporations will just pile in with layoffs. Or it'll happen in the next 6 months to a year with a slowdown in the economy because it's lethargic and yada, 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 all that stuff. Sooner or later, it's coming. And I am giving you the heads up that the sooner you figure it out, how you can write options on stocks you already own, the better. And even if you've got, I don't know, let's say you got 82 IBM shares or something like that, I'm telling you, I don't care how you do it. I don't care what you've got to do. Sell something, have a garage sale. I don't care. Get some cash. Get 18 more shares of IBM. So you've got 100. And you can now write one call option at a time on all 100 shares. If IBM can bring you 3 or 4 or 500 a month in cash in premium shrinkage, there's part of your problem solved. That's not all of it. That's part. You're taking part of your portfolio, which is inactive. It's getting a yield. Yeah, there's a dividend coming, but you are 82% inefficient here. You've got to get to 100 shares, and you've got to start writing calls on this stuff and really bring money in for that IBM. You are getting ripped off holding 82 shares. If you can get your hands on, you have something like, I don't know, let's say you have some investments somewhere. But if you liquidated them and bought um, Hewlett Packard, HPQ, if you could buy HPQ, 100 shares, 200 shares, 300 shares, um, very good move. First of all, the company does pay a dividend. The stock's at $34 a share. And so it's $3,400 to write one call. It's $6,800 to start writing two calls. It's do the math. It you can be in the call writing business for not a lot of money just with the stock. Now, of course, I've talked to you about poor man covered calls. There's a reason they call it that. If you can buy $20 options on Hewlett Packard that run you $1,500 a piece, you can start writing options with $1,500. If you got 15 grand lying around in a deadbeat investment somewhere, well, turn it into Hewlett Packard contracts at $20 and write 10 calls at a time and start bringing in 500, 800, $1,000 a month. Bring money in from sources that you've never brought them in before, because you certainly aren't getting it from your existing investments. They're sitting worthless. You've got to take control of your money and make it work for you at every level. And you're not going to be able to do it by putting money into a savings account. Forget about it. It's not going to happen. Your employers, great people. Some of the firms you work for, greatest companies in the world, innovators, everything. They've had a great track record, but they are in business to make money, and they're in business to survive tough times. And they look at their business in a whole different way. At the top end, again, the C-suite people look down at the 90% below them in a whole different way than you look up to them. If you look up to them at all, they look to you. They look down to you as an expense to profitability for the company. And if there's a way they can cut 5% of the overhead and it doesn't affect the sales and it improves net margins, they'll do it. They're hiring professionals outside of the corporation. You don't know anyone in the company. You don't know, and you never will know anyone in your firm that is the cutter. The cutters are on the outside. And that's the bottom line. If you've ever seen that movie now of course I'm going completely blank. I'm trying to remember who this guy is. He married the lawyer who's the human rights lawyer. They live in Milan, Italy. He got the Lifetime Achievement Award as being a lawyer, and yet she saves lives in Rwanda and stuff. George Clooney. George Clooney. I love George Clooney. And just as I'm saying it, Wing Commander is right on top of me. George Clooney. George Clooney was in a movie where he was supposed to fire people. Remember that movie? He would fly from city to city, and he was trying to get all these status points for American Airlines. You remember that movie? George Clooney. That movie, that's where firms hired outside entities to fire people. If you're involved in a corporation that is thinking about changing their game plan, do not be surprised that these firms already have hired outside entities and have realized, look, we don't have to worry about our employees from Tulsa, Oklahoma anymore. We don't have to worry about the local scene in Memphis. Look at what Caterpillar announced the other day. A Dow Jones 30 company left Illinois after 200 years of being there, and they're moving to Texas. Lower income tax. How many jobs are going to be dropped in Illinois? Think about this. How many of the head office people are not being offered a transfer to come on down to Texas? This is their opportunity to clean house, and they're going to do it. And Wall Street is going to love it. Wall Street bankers are going to go, oh, wow, this is great. Oh, man, this is fantastic. These guys are completely cleaning house, getting rid of the deadwood, getting rid of those 53 to 65-year-olds. Dump them, buy them off, get rid of them. Don't bring them to Texas. Hire young kids instead. And they're not going to be Texans. You see, Texas thinks they're winners. We got Caterpillar coming to our state. You're a loser, Texas. You're a loser because, yeah, you've got the head office of Caterpillar. Yeah, They're not going to build a gigantic campus for 40,000 employees. They're going to have employees around the world work for them remotely. And you're getting none of the income tax. You get none of it. I understand, though, I heard through the grapevine that Caterpillar really didn't go after concessions from Texas. Well, he didn't have to. Texas is such a giveaway state. It already gives away the lowest tax rates in America for many, many corporations. And that's why they're going there. Tesla's there and others. Virginia's another winner. Virginia just got Boeing to go from Chicago to Virginia, which, by the way, Boeing left Seattle to go to Chicago 15, 20 years ago. High state, Washington, to a lower income tax state, Illinois, and now they're out of Illinois going to no income tax, Virginia, like really low income tax, Virginia. There is no loyalty among corporations and their hometowns. And there's no loyalty to corporations and you if you're not in the C-suite. And even up there, you might be on the line as well. You might need to be in the top 2%, 1% to be safe. Other than that, you're just an expense. And so as your buddy, as your friend, I am telling you guys, make sure and find out if you can organize your affairs, whether it's 401ks, IRAs, shifting the investments you have through your employers, investments you may have changed jobs like 2 or 3 times over 15, 20 years, and you've got something over here, and something over there, and something over there. Get it together, all right? Get your act together, get off your duffs, and do some work for yourself because you're the beneficiary of this work. Get a hold of a tax professional and say, look, I'm watching Uncle Bruce all the time, and I want to write options on stock. I want to write options on Apple. I want to write options on Microsoft. I want to write options on HPQ. I want to write options on GameStop. I want to buy SoFi shares. Hey, I got this, I got this, I got that, I got that. What are the ramifications and what are the solutions for putting all this under one roof? What's the best tax advantage for me? And how can I write options, make income from it, and pay the lowest taxes? Talk to me, buddy. Talk to me, because that's what you're paying them for. It's time to put up some cash and get your act together, because behind your back, they are very busy right now figuring out your future and everyone else's around you within the organization. And you might be shocked at the fact that your job is on the line and that you might be let go because they just don't want to pay the kind of money they're paying you anymore. They can replace you with someone at 1/5 the money. They're going to do it. They're going to do it. Don't think they won't do it. They'll do it. And they'll say sorry, but they won't mean it, because the top people will get bonuses when they kick your butt out of the organization and replace you with someone way cheaper, hundreds of thousands of times over, or hundreds of times over, or whatever it is per company. These companies are going to reap billions of profits, millions and millions every month, billions every few years of additional profits because they got rid of you. And you've got to be on the other side ready to go. And you've got to be more ready than they are. And you might be proactive about the whole thing. Don't be waiting for the layoff. Although, look, if you're going to get a buyout, you don't want to quit a month before they offer you $100,000 to walk. I mean, whatever that is. If you can get a healthy buyout deal, of course, but get your act together in the meantime so that if it happens and when it happens, you're set. This is the difference between people who are winners and people who are devastated losers, because the folks who find out of left field that they're out of a job, they go into a depression that can last years. They never recover from it. They pick up terrible habits, and it just ultimately costs them their health and their way of life and their friends. Being proactive about what's really going on out there is going to be your secret weapon to success, because you are not going to allow your corporate masters to screw with you and your family and your life going forward. It's time to take care of you. And that's what this is all about. That's why I'm your buddy. I'm telling you, maybe I'm kind of like that guy, that commercial where the person has a really bad cough and they're selling that cough syrup that tastes just awful, but it works. Maybe I'm that guy. You remember the name of that brand of cough syrup? It tastes awful, but it works. Remember what that is? I can't remember the name of that stuff, but I thought that was a good campaign. Very good ad campaign. I love ad campaigns that do that kind of stuff. Really make you wonder, oh, yeah, that's right. It's medicine. Why should it taste nice? Yeah, it should taste kind of yucky. Yeah, but if it works, I can't remember the name of that stuff. I think Jen is listening to something on her headphones, so she doesn't hear me. Yeah, she's busy. NyQuil? I didn't think it was NyQuil. No, I didn't think it was NyQuil. Robitussin? Not sure. I think it's an old-fashioned 1900 stuff. Justin Robitussin. I'm not sure if this is it. When I see the name, it'll hit. It'll hit. But it isn't that. Yeah. There was. Oh, now she's asking me. Okay, so you remember an ad campaign on TV about maybe 10, 15 years ago, and it was for sore throats and a cough, and it was a syrup, cough syrup, and it tasted awful, but it works. Barclays or Buckley's. That's what it was called.
I guarantee it tastes bad.
Yeah, but Michael's saying 1900. It's got to have cocaine in it.
Oh yeah.
Yeah, Buckley's cough syrup. Taste awful, but it really works. Buckley's. Also cod liver oil. John. Yeah. Yeah, if you're you know what you could do someday for fun. If your kids are acting up on you, and they're a little
have cod liver oil in the winter.
If they're
Line up and
yeah, if they're acting up on you, giving you a hard time as a parent. What was it like when you were 20 or 10 years old? What was it like when you were a child?
Our hair was nice and shiny.
Our hair, yeah. Oh, yeah. Buckley says pick home. Who else is here? I remember that, says Buckley. Yeah, if your kids are acting up on you, all you got to do is get yourself one of those cod liver oils and say, well, you want to know what it was like when I was a kid in 1980? Oh, I'll show you what I'll tell you what. I'll show you what it was like when Grandpa was a kid in 1940. How about that? Or whatever year it was. Pull out the old cod liver oil and have them take a taste, and tell them that if they don't make a face, they get $10. You can save all the money. You'll never pay out. You'll never pay out because it's a 30-second deal and they can't move away from it. You have to keep looking at each other. There's no way they're going to win that bet. Oh, yeah. People don't trust medicine that tastes good, says Savior Alexander. I'm like number 64, 2 days in a row. This is great stuff. Welcome all of you to the show. As you notice, my voice is still failing me. I'm stuffed up. It's a cold. Thankfully, I'm not suffering from any massive fever or anything like that. I'm dead tired, been getting extra sleep, and I've been blowing the schnozola to try to keep everything going. But I wanted to give you the heads up today that I think the next shoe to drop in North America and Europe and every other G20 country, the top 20 countries of the world industrialized, I think we're going to start seeing the follow through of this remote working thing, where instead of the corporations being on the back foot and being caught off guard by it all, they're going to put it on their front burner and they're going to use it to their advantage now. And I can absolutely understand why wouldn't they? If they have figured out, my God, we had an office tower in downtown Dallas or Philadelphia or in Calgary, or we had a big building in Berlin or wherever, and we used to bring in 1,000, 2,000, 3,000, 4,000 people every day. And we generated our business for decades like that. And all of a sudden, without any discussion, we were shut down. And all of our employees had to work from home. whether we liked it or not. It wasn't like a choice. It wasn't like, the government asked us if we do it. It was automatic. You're done. Your office building is closed. And so what happened? The corporate world thrived. Corporate world thrived. The employees thrived. At first, all of you out there, after a few weeks of adjustments, began to go, it's pretty good. I'm getting up at 6:30 in the morning anyway. Instead of shaving and showering as a guy, and then getting dressed and stopping for a coffee at the subway stop, and then take the subway into the office and get to the office at 8:30. Instead of doing that, I get up at 6:30, and at 6:35, I got myself a coffee that I've made the way I like it here at home, and I'm working. I'm getting caught up on my stuff. And by 9:30, 3 hours later, that's when I go and take a shower. And I'm having some breakfast. And I'm grabbing my bike and I'm going down to wherever, to the park, and just getting some air and getting a coffee at a Starbucks to meet a pal. Or I'm talking to someone on Zoom or what have you. My world has completely changed. I put in my 8 hours, but I'm doing it in 5. I can get my work done in 5 hours. This is bloody great. And they're still paying me what they've always been paying me with these benefits. This is great. Yeah, that was the way it was. It's not the way it's going to be anymore. That's going to change now because I want to say corporate America, but the corporate world will figure it out as you have. They're going, this is great. Getting people to work from home, we can pay them 80% of what we used to pay them. Difficult to take benefits and money away from people, though. Very difficult. So the better way to do it is to replace them. But why just stop there? Why stop and just replace people with other people in the same neighborhood? That's not going to fly because people are going to know people that got these jobs. No. Here's what we'll do. We'll engage the services of a worldwide headhunting firm, and we'll replace our employees. Let's say 40% of them, 50% of them, starting with the top earning non C-suite people all the way down. We'll get rid of all those guys with people that get paid 20 cents on the dollar down to 12 cents on the dollar. A couple of glitches here and there, but we'll figure it out. That's what we're going to do. And we're only going to pay them 8,000 a year, 11,000 a year, 14,000 a year instead of 60, 80, 100. That's what we're going to do. And it's coming. And those of you out there who are thinking, well, I'm good. I'm 53 and I'm 57 and all I'm going to do is work from home now for the next 5-7 years till I retire. I'm going to collect my big fat paycheck from my employer and I'm going to have my life the way I want my life. And the hell with those guys. I'm not going back to the office. I got a rude awakening coming for some of you folks. They're going to dump you and they're going to buy you out. And I am praying that those of you who are 45 and older, 43 and older will get enough where you will do your mathematics. You'll hang out with this guy. You might contact me for a one-on-one session and say, Bruce, I got to talk to you one-on-one about this. This could be life-changing. I really got to get your opinion on this. And you may find that, okay, you're dumping me. That's all right. I have another way to go here. I got another avenue I want to follow. And it could be the one to totally allow you to take the rest of your life in your hands, in your control, as your own boss, and you will never work for a corporate entity ever again. Think about that. Now, of course, I've talked to you guys about being consultants. I've talked to you about having multiple companies on a retainer type basis. You may find that some of you will get a call from your employer, say, look, we're changing everything. We're changing everything. We've announced all this, but here's what we want to do with you. You've been with us for 25 years. We are going to buy you out, but we'd like to retain you for 10 hours a week. And so it's like 2 days a week, 5 hours a day, and we'll pay you, $70 an hour. Would you be interested in that kind of a deal? And you're getting $700 a week to work part-time for these guys. and it's a cash deal. It's like a consulting cash deal. There's no benefits or nothing else. You got your settlement, plus you're getting this, and now you can sit back and go, you know what? I can handle this because if I can get a couple more of these kinds of deals, maybe I can get 70 an hour. Maybe I get 120 an hour. You might get 150 an hour. It all depends. You bring in $100 an hour, 40 hours a week in consulting work on a retainer basis, you're making 200,000 a year. Hello, and you're doing trading with Uncle Bruce for options. You are changing your life absolutely, and so it could be the most exciting time of your life, but it could also be very stressful, and it usually is stressful first. It starts as stressful, and then hopefully you've got the game plan to not have it be stressful. All right. Well, we'll stay on top of it. I'm here. I'm your buddy. I might be the only buddy you've got to help you get through it. If you want to have a one-on-one with me, you let me know. You know that I'm available. Send me a private email. Say, Uncle Bruce, I'd like to talk to you one-on-one about my life and my trading and my accounts. We'll get together. We'll make it work. Even from Europe, we'll figure it out. Okay, guys? Thank you all for being here. Where are we at here? Oh my gosh, 8 minutes to go. Uncle Bruce is leaking like a sieve. He's leaking like a sieve. I apologize. I don't want to be blowing my nose on the air, but gravity is making me do it. And Jen is laughing her butt off over there. She thinks
Just be hanging you by your ankles.
you should be hanging me by my ankles, she says. You know?
When you sleep, right? When you don't drink out.
See, the practicality of that girl is incredible. I mean,
I try.
oh,
I
who,
try.
John says, who remembers putting turpentine on cuts?
Oh, yeah.
Yikes. Get well soon, Uncle Bruce and
Right,
Auntie
right.
Jen.
Good.
Lame duck number 116 thumbs ups. Thank you, guys. I would kill for $100,000 payoff. Jeez, no kidding. Those are stupid numbers. Yes, indeed, they are. The thing I learned, here's something I learned. It took me, I think I remember there was a time I was a broker in an office just as a kind of a new salesman. This would be 1979, 80. And I think our receptionist was expecting. And the firm, at that time, this is 79, so there weren't like a lot of benefits like there are now. But even then, I think the receptionist was going to be gone for like 3 months or something like that. Can't hold a candle to what you get now in Europe, for example. But nonetheless, besides the point, that's besides the point. The reality was the firm had to bring in a temp. We had to bring in a temp. We couldn't hire anyone full time because this gal was coming back. So a temp was needed. And somehow I heard through the grapevine that the temp employee in 1979 was costing the firm $20 an hour. And in 1979, the minimum wage in the province of Alberta, Calgary, Alberta, Canada, the minimum wage was like $6 an hour. $6 an hour was the minimum wage, and the firm was hiring a 3-month contract worker that could handle the reception desk for $20 an hour. Now, the gal who was working the reception desk full time, she wasn't making anywhere near that kind of money. $20 an hour would have brought her $800 a week, $3,200 a month. No way. She was hauling in maybe $1,300 a month, $1,400 a month. So the firm, my company, was willing to pay double for a temp employee. Okay, now think about you, okay, what you do for your company. If your firm had to hire a temp to cover for you for a month or 2 or 3 or 4 or 5 or 6, how much would they pay an outside agency to cover for your desk? Now, some of you might sarcastically say, Bruce, they get a discount. I'm not even, I'm not worth what I'm getting paid. Others of you might go, I don't know if they'd get any more, if it would cost them any more. And still others of you, you know full well, you absolutely know for a fact that people around you over the years have been replaced with a temp worker, and you knew and you've heard the word that those people get double or more, or let's say it costs the company double or more per hour to replace people around you temporarily. Corporations are willing to pay other corporations corporate rates for whatever services, when in reality, the other corporation is only providing a human being to replace someone else's job. That's all it is. It's just another person that will be let go without incident at the end of the term. Now I'm saying to you guys, well, if you turned yourself into a temp agency where you hired yourself out to this company, this company, this company, this company, and you could find either full-time hours or part-time hours as a retainer with 3, 4, 5, or 6 corporations, you may find that you can generate $100 an hour in revenue, because that's what you would be brought in for as a temp by the agency. The agency would charge 100 for you. You'd only get about $30, $35 of the 100. The agency would keep the remainder. That's how agencies get rich. That's how they make all their money. That's why employment agencies usually have a lot of employees in nice offices. They make us some good coin. Become the temp agency and become the number one employee. Now, if you're really entrepreneurial, look, you've worked with 3 or 4 people in the past in your office, and you all got laid off lately, or you're thinking you might all get laid off, and you can find employment for the 4 of you, and you can be the coordinator of employment for the 4 of you, then you have a little chat with your friends and have them join your temp agency. And okay, you get your buddies employed for 60, 80, $100 an hour. That's the charge that's being charged to the corporations out there, and you're paying them 60% of the take. That still might be way more than they're getting now. And you get a third of the take off the top. A third of this one, a third of this one, and a third of this one, and then you're working on top of that. Make some money. It can be done. It's a question of how much work you want to put into it. What you put into it is what you're going to get out of it. Okay. Good morning, everybody. Kathy, good morning. Is Bruce telling me I'm getting laid off? Kathy, 117 thumbs up. We're opening up in a minute. I think we're going to start trading in like a minute. I can't believe I'm still on the air without a voice with a minute to go. It's incredible. Larry is going to hit those bells at any moment, and I appreciate it, Larry, if you're able to do that for us. Yesterday, we lost 151 points on the Dow. Going into the opening here, we're up. Let's see, the futures were showing up. See if I can get this to work, or I can't. Oh gosh, I can't. Hang on, my machine is screwed up again. Yep, I'm having trouble. I think we were up 238 on the Dow going into the opening here. 37 on S&P, 145 on NASDAQ, 1.2% on NASDAQ, 1% on S&P, 0.77 on the Dow. We're down 59 cents on crude, and we're about to start trading for the day. Okay, that is, I think, what's going on here. GameStop, 125.21, down 96 cents is what I see, and I'm curious if that is actually the opening salvo. It might well be. I think we're up and running, and thank you, everybody. Larry has done what he does so well. Thank you. Mike, I charge $105 an hour for consulting work, and I say more power to you. You're obviously in the upper echelon of consulting, and that's great. And keep it going. Some of you out there, you might get that kind of money, more or less. It all depends. Some of you would be shocked to find out how much your services are actually worth per hour on a consulting basis versus what you're getting for a full-time salary. You'd be shocked at how much of a discount you're going for. That's another thing I just want to mention to you out there to kind of give you a heads up on. Thank you, DH. Thank you, Larry. I appreciate this. Nazareth, my company pays me $80 an hour already. Not much upside on Uncle Bruce's numbers. Maybe not. Maybe there is, though, Nazareth. Maybe you haven't shopped around. Remember, don't shop around in your neighborhood. Shop around in your industry. You might find that being a consultant to a New York-based corporation, or being a consultant to a Berlin-based corporation, or to a Prague or to a London or to a Cincinnati, you might be worth way more an hour than you think you are. Don't undercut yourself, my friend. Let's see. Good morning, everybody. Angela wants to know, does anyone know when the Fed speaks? I think it's, is it 2 Eastern time? 2 o'clock? 2 o'clock Eastern? Anybody know? We'll find out. DPCY is here. Welcome, DPCY. A £5 donation. This is pound sterling. And I don't care that pound sterling has had the crap kicked out of it lately. This is still a pound sterling donation. And I say thank you very much. I have been made redundant 8 times between 96 and 08. I went single man limited company in 08, but UK IR35 tax bites. That 700 is 355 that you get. It's unbelievable. And it really is. It really is. Aurora says, we're going to get that Fed announcement at 2 o'clock today, just so you know. Thank you. Afternoon at 2 p.m., says Gowdy. There's a confirmation. We're up 273 on the Dow now. We're up 273 on the Dow, okay? Let me see if I can get the latest. We're up 38 on the S&P, 130 on NASDAQ. And we're up 1.2% on NASDAQ, 1% on S&P, and 0.88% on the Dow. GameStop, 125.31. 125.21, down 96 cents. BPCY, thank you for that donation and your comment. Always welcome, and I'm glad you're here. If you ever become a member of the channel, would love to have you. Thank you, buddy. Nick, Fed hike and notes at 2 p.m. Powell talk at 2:30 with the press, I think. Yeah, lame duck. Chloroseptic is the worst. Buckley's cough syrup. Tastes awful, but it works. I remember that campaign. Ventures of Duncan. Good morning, Angela. Welcome all to the show today. We're going to watch and see how this market reacts. We may have an uptick this morning leading into the announcement by the Fed. We may have a continuation of the upside after the Fed because it's the relief rally now that the Band-Aid has been ripped off. Well, let's just go higher. But we might get the opposite. We might get a George Costanza where it's the opposite that's going to happen. We're going to get the numbers from the Fed and the market is going to go, geez, we're in trouble. And boom, down we go. Well, find out. We'll see what's going on. We'll be around. Do you think 75 basis points is on the table? I do. The Fed said it wouldn't do more than 50 last month. They did. Coyote SoFi's run back to 6 feels like a rug pull set up for this afternoon. That's just my gut feeling. SoFi right now 603 up 11. Spire 142 up 6. Smart Red up 11 504. Matterport up 4.5 to 404.5. Dow up 262. GameStop still down 44. 125.72 right now. Wing Commander, my company charges $450 an hour. Guess how much I'm getting? Oh no. Duncan says 45. Austin, why do wives laugh when your nose is running? You stub your toe, burn your mouth, except why do the wives laugh? Well, I can't answer that question honestly. Well, maybe I could. Jen, could you go for a walk?
I'm sorry.
Oh no, she's listening with her earphones. No, nothing. It's okay. It's all right. It's fine. So no problem. No problem. It's a very delicate situation. Michael, other people getting hurt is funny, Austin. We just love seeing other people get hurt. GameStop is looking like 126.30. Looks like we're trying to go up a little bit right now. I suspect. We got it at 126.30, up 13 cents. Okay. Well, we'll see what happens. The Dow up 271. It looks like. I'm just going to triple check all this. I have issues with my devices like you cannot believe right now. 125.47 on GameStop, down 70 again. Okay. For some reason, I don't know why, but for some reason, my biggest iPad wants to show me other stuff rather than the markets. Why does it want to do that? I don't understand. Maybe it doesn't want to give me the bad news. Maybe that's what it is. Coyote, I saw a Reddit post yesterday where this team of developers accidentally got mailed the entire company's spreadsheet of salaries. One of the guys on the team found he was paid 30,000 less than the second lowest guy. Uh, what do we call that? Oh, I know the word. Oops. Yeah, that's not good. Austin, I guess so. John, delay laughing just long enough to know the person isn't really hurt, then laugh at you, laugh your ass off. Zed, good morning. I am kicking the thumbs at 137. Thanks, buddy. Let's go here. Vilbus, has CYXT really not traded a single share yet? Austin, John, I wiped out. I wiped out getting out of the shower once. To this day, I haven't seen my wife laugh so hard. Oh my goodness. We got the Dow ahead 254 points. Okay. That's what we got so far. All of this can disappear in minutes. But we'll see. We'll see if this disappears. Keep in mind, we lost 150 yesterday. We lost 800 the day before, 800 the day before. We're way off in the last week. So a 300 point rally here is a nothing burger. The question is, will it really last? This is the question. We're up 40 on the S&P, 138 on NASDAQ. And that bugs me because NASDAQ is only up 1.2%. This is not a big time rally. That's not happening. Coyote, good ammo for your next meeting with your boss. When you demand a fat raise, though, John is laughing out loud. Splair, I have the same issue. I want to click on Google in the menu and end up at the McDonald's app after almost a year. What's that all about? Coyote, Austin, I've been with my girl for 6 years, and I don't think I've ever heard her laugh as hard as when she stole my glasses on our third date and I ran into a wall. Well, that's what cinched it. She wasn't going to let you go now. Someone made a comment about a SoFi double bottom. What does that mean, technically speaking? I have no idea. Coyote, it is universal, says Austin. I don't know anything about a double bottom. I don't know. I'm not sure if there's anything like that going on here. SoFi is 608, up 15 cents. We're green everywhere. We're green. We're up 294 on the Dow. And we're up 3 on Matterport. We're up 8 on Smart Rent, up 15 on SoFi, up 3 on Spire. We're up 34 on GameStop, 27 on AMC, ATIP up 3. Rocket Lab up 14, Sextera up 3 cents at 12.75 on 2,300 volume. ME up 7 cents, 243. Pfizer is down. It's down 40 cents. HPQ is up 36. Even Twitter's up 66. Home Depot up 256 to 281. Robinhood down a dime. Vanik up 190. IBM up 19 cents. Microsoft up $4. Apple up 128. Goldman up 484. Cisco up 51. Facebook, Meta Platforms up 313. Amazon up $1.72 to 104.03. Tesla up 680. $669. Google up $35.50. Bed Bath and Beyond is at 702, up 7. BlackBerry up 15 cents. Royal Caribbean 39.67, up 18 cents. It is where it should be, and even this might be too high. Target up 38 cents. JP Morgan up $1.09. Costco up $4.50. Walmart up 53 cents. Nvidia up $3.36. Disney up $1.30. It's at 95.50. American Airlines up 36 to 13.31. Netflix 173, up $6, but under 200. Moderna up 360. Wow. We got green, but not like unbelievable green. We got the kind of a green market that could reverse in 10 minutes. Just waiting for the Fed to announce their interest rate announcement. That's all we're waiting on. That's all it is. And will the market like it? Use it as the excuse to get out? Are people selling into this rally now to buy back this afternoon at way lower prices? This could be happening. It could well be happening. GameStop 128.12, up $1.93. Oh my goodness. Can't blow either nostril, both stuffed up. What can I say? 128.10. There you have it. Oh boy, oh boy. Oil down $1.08 to 117.85. There you go. Oh my goodness. Looks like Bernie bought some more SoFi at the right time. Karim, Austin, possible incoming bullish reversal, waiting for confirmation. Coyote, wow, things really are climbing. Maybe day traders expect a big dip this afternoon, then buy and dump before 2. Let's go here. Thoughts on Carnival? Not good thoughts. Credit Savage. Good morning, my fellow simpletons and Uncle Bruce. 75 basis points, huh? Well, isn't that good enough for banks? Is that good for banks? SoFi should do well. I think it is. I agree. What do you think is going to happen with these rates? Coyote, that's what I think is happening. They will buy back in this afternoon on the dip. Alexander, I think they'll stay firm on 50 km. So that'll be the market won't like it. 50 basis points. Okay, Nick is here. 151 thumbs up. Thanks, buddy. Alexander, yeah, not kilometer, autocorrect, BPS. Nazareth got another 300 SoFi down here. It's a bargain. 612. It's a bargain. Of course it is. Well, what can I say? 130.09 on GameStop. 130.09. This might be the high of the day or so. Yeah, 130.79 seems to have been the high of the day already. 130.79 on GameStop right now. 129.80. What I see at the moment. 129.11, a little pullback already. So we had a bit of a pop and a pullback. Volume on GameStop, 300,000. 12 minutes in. Not so good. Okay. Dow's up 342. That's good. The Dow's up 342, but S&P's up 49. Nasdaq up 183. Well, we'll see. It's going to be a while before we have the announcement here, so gotta wait this out. My today's short play is U.S. Steel. Rock and roll, Nick. Larry, Uncle Bruce, some nice spicy mustard could clear those sinuses up. Haven't found any yet. The Zemph they have here, not hot enough for me. I need more. Austin, Uncle Bruce, your backup changed. What country are you in now? Oh, we're still in Vienna, Austria, buddy. John, don't look. Stocks are moving higher. Don't look, but they're moving higher. We're up 330 on the Dow. But like I said, we may see selling on the news. That might be the ultimate game here. We get a pop in the first hour, hour and a half, 2 hours. Then we level off. Out comes the news. We level for a while. And then the deterioration kicks in again. And what happens? I don't know how bad it gets. That could happen. Could. We could have an update. We could have a 200-point update today and then have a really bad day tomorrow. Or hold on. I don't know. I don't think we're done yet. Joe Olivia, are we writing on GameStop right now or waiting to see if it keeps running? If you haven't written a call on GameStop and you can write a 135 call on GameStop and bring in a nice premium or a 140 for several weeks out, I'd do it. I would do it. Nazareth, buy the rumor, sell the news. Yeah. Cindy, so selling options right now might be a good idea. Selling into strength. Yeah, might be a good idea. Take an out of the money call and write it for 2 to 4 weeks and bring in premium. Be well compensated for the gamble. Let the gamblers cough up your insurance premium and help you cover your transaction. Absolutely. Okay. We're up 316. We're not galloping to new highs here. We're trying to recover losses. This is not good. This is normal. This is exactly how it's done, and it's normal. Austin, Michael, you have a SoFi call and play. Alexander, the market is wanting any excuse to do what they wanted to do either way, relief rally or sell off. FOMC almost doesn't matter. They'll do what they want to do. There you go. Fear of missing out. Nick, if anyone's shorting, you can surely make a few thousand, if not a few hundred today. I'm already up 1,200 on my short. That means writing options is a good idea. Tiff, I hope our SPACs don't get hit too hard. They're weighted down anyways. Michael, Austin, negative. Nazareth, July 1, 130 strike, says Nazareth. $15 stink bin. Is that the kind of premium that you're talking about, Uncle Bruce? Okay. If you're offering the contract, it's a stink offer. So that's the first thing. You're putting in a stink offer. But I would be doing that at $14.90, not at $15 even. $14.90, not 15. Too many other people in your neighborhood joining your party. If that is indeed out of the money, if that's ahead of the market, that's what I'd be looking at. It's a July 1, 130. I like the sound of that. I don't know how close to the market you are, but I sure like the sound of that contract. What was that again? A July 1 call. Let's take a look at the July ones here. If I can get I'm trying to get my big ass iPad to work for me here. Here we go. Don't mind me. I have to move forward here. Okay, so July 1, 130. Yeah, I see the market as I see it, 925 to 1225, nowhere near 15 or 1490. But look, offering it at 1490. If the stock wants to go to 131, 132, you might have a shot. Not so sure it's going to happen, but 1290 would be a bit of a stink offer as well, ahead of 1225. We'll see. There's 507 of them out there, so it's worth a look. Going to July the 8th, the next week, they're $10 to 1480 bid ask. So, 1475 is where I'd be on those 130s. And then July 15th, the third Friday in July, where most contracts are trading, the 130s are showing 1225 to 1705. So I'd go 1690 on those and just see if you got lucky at 1690. That again is pure premium. And even if you buy them back a week or two from now, you don't have to wait till the end of this contract. The shares want to back off a little bit, you'll score them. But in the next 2 weeks, they'll cough up some of this ground, of course. They'll get down to that 14, 12, 10 range pretty fast, even if the shares stay where they are, because it's all premium for sure. All right, H. Gregory, I'm shorting the SPY. Let's go, Papa Powell. Stink offer. That is correct. Duncan needs to be stinky, Nazareth. He needs to be stinky. Well, we'll see what happens. There's a number of ways to play this game. Like I say, you can decide which way you want to go on it. But we're at 128, 52, 128.60 here. We did touch 130.79, albeit briefly. If it goes into 130, 131, then look at 130s or 135s and even 140s for the third week of July. And look for a fat premium, really fat. Put a bunch of cash in your account and then just make it worth your while to hang on. And if it's going to be a 135 or 140 buyout with a $15 premium, that's 155 to be taken out. You don't mind that deal. Let's see what it gives. Nick, my goal for the day is $5,000. I'm already near 3,400 on my X short. Right now, my average is 20.87. Well, way to go, Nick. Way to do it. Spire has popped 150.05. $1.50.5, 8.5 cents higher. We'll take it. 152. We're up a dime. SoFi up 19 to 612. Smart Red up 7 to $5. Matterport 403.5 to up 3.5. The Dow's up 370 now. We'll take the action. GameStop 129 coming up again. Might get some stink offers off here. Nazareth Adventure with Duncan. I try to get $5 per share per week. That's my target for GameStop contracts. $5 a week. It's $1 a day. Those shares pay me. One contract, it's $100 a day. 5 contracts, I make $500 a day. 15 contracts, I make $1,500 a day. That's the name of the game. Raise it by 5. Raise it only 5. There you go. Nicely done. 363 is the uptick on the Dow right now. GameStop back to 130.16. So there may be stink offers coming your way. Maybe. Okay. We got ATIP up 3. Rocket Lab up 15 cents to 4.15. 6 Stairs up 28 to $13. ME up 6, 242. Pfizer's trying to come back. It's still down only 31 cents now. HPQ up 39. We're up 247 on Vanik. IBM up $1. Microsoft up 6. Apple up 170. Goldman up 667. Cisco up 62 cents. Remember, those of you out there who might be, possibly could be, let go, who have stocks, shares through your employment plan, the deal should be that in a very short period of time after being let go, signing off on an offer, whatever, you should be vested on your stock. So whatever stock you have in the corporations you work for, if they are publicly traded companies, your stock should be available to you depending on how you've structured your personal affairs. Again, talk to a tax professional, but you could be in a position to start writing options on stock you own for the company you work for. And I know for a fact, absolutely know for a fact, this has happened many times on my one-on-one consultations where my guest will say to me, well, I got so many shares of this company that I've worked for years and years and years and years. And I take a look at the stock, I take a look at the option chain, and I mention just casually, well, did you know that if you were to write a 2-week contract that is 6% out of the money, you could bring in this much money right now? And they're going, what? What? That's half my salary. And when that's half a month, you can do this twice a month. And that is your salary. Why are you working for these guys? Why are you still working? Do you like your job that much? No, I hate it. Why are you still there? Get out of there. This is where people are figuring out the call is coming from within the building. They can't believe it. And I'm telling you, you've got to sometimes stop and reassess your life and figure out, where am I really at here? Where am I really at? Yes, indeed, folks. Okay. Anyway, fun times. Let's see what else is going on here. Thank you. John, I'm heading to a meeting. Take care, everybody. H. Gregory, how can GameStop move on so little volume? It just does. I mean, today people don't want to sell it because of the Fed. The sellers will come into GameStop after the Fed. Maybe not. There might be 10 times more buyers after the Fed, or 10 times more sellers and no buyers after the Fed. This is the way it is. This is the market. It's emotional. Sometimes it has nothing to do with reality, but emotion only. You got to let the emotion happen. Let those players on the casino floor, those players on your casino floor, let them do whatever they're going to do. They're going to have a party. They're going to gamble. They're going to go nuts. Some will be winners, most will be losers, and take advantage of them bit by bit by bit. That's what you got to do, H. Gregory. You got to let it happen. You need exuberance. You want the markets to have good moves. It brings them in. It brings in the players that allows you to make a living off them. You got to have them, and they got to feel like they have a chance to make money. They have to feel like they have a chance. Otherwise, they won't come to your casino. There you go. What are we up to now? We're up 350 on the Dow. Only 350 now. So we're kind of topping out at the moment. We're down 77 cents on oil, 118.16 on oil. I'm glad to see that. It's not like a big discount from 123 the other day, but this is better. Just let's drift a little lower now for a week or two. Let's ease this up. This could be good. GameStop 127.36, up $1.19. The high today for GameStop, 130.79. It looks like that. Looks like that would have been the high today on GameStop. Okay. So we've given up about $3.30 something so far from the high at the moment. The low, 123.64. So we're kind of in the mid-range right now on GameStop. Volume on the day is 428,000 or so. Not a lot. Okay. There you go. 127.99 up 182. All right. Boy, you'd think that with headlines today, these markets would be getting crushed. Fed weighs biggest interest rate hike since 1994. ECB holds emergency meeting. Those kinds of headlines. You'd think we're down 1,000 points. We're up 386. Yeah, totally George Costanza, the opposite. Beach Boy, Uncle Bruce, missed my question. Is it okay for the same 215 stink bid today, also on GameStop, June 17, 110s? Thank you very much. Yes, it is. If the shares start drifting lower, get the bid in there. Obviously, right at the moment, at 128 and a half, we all know that your 110 calls are 1850 in the money. So putting in a 215 stink bid, you know, you're not close. Now we dropped $7, $8 today. We get down to 120, 118. All of a sudden, you're only $8 in the money, and a $6, $7 spike drop, which can happen, could put you into the chips. So if this thing drops down to the low 120s, 121, 22, I'd consider putting that order in there. Right now, just kind of hold on to it and just go, okay, I'm ready to put this thing in. I'm ready. I'm watching. I'm not going anywhere. My buddy Uncle Bruce is steering me straight here. We'll figure this out. Well, we'll see what happens. We're up 372 on the Dow. We might be topping out, maybe 1.2% gain. S&P is up 1.4. The Nasdaq up 1.6. Yeah, I don't see a lot of upside from here. I just get the vibe that it's not. They're not believing it. They're not in a hurry to buy. They're not panic buying. They're kind of, well, I'll pick a few things up. We'll see. We'll see. 128.15 on GameStop, up 198 right now. Okay, that's what we got. We're approaching 4 o'clock my time, which in New York means we're approaching 10 o'clock New York time. So we're still 4 hours away from the Fed decision. So kind of a ways to go before we know. So we have a lot of stuff to watch between now and then. Okay. Up 369 on the Dow Jones, and we could fluctuate 200-300 points either direction. I mean, we could go down to plus 100, up plus 400, down again. I mean, we can. We could be down 200 points and plus 200. We could play that game, the oscillating game. Keep an eye on your stocks. Keep an eye on your contracts. Right into strength and take advantage of dips. There you go. If you could score $1 or $2 on a contract, say, thank you, sir. May I have another? Take some money off the table. Absolutely. If today is the kind of day that you can make $500 to $1,000 buying and selling, or selling and buying contracts, then today's that kind of day. Cody, I'm considering buying some puts before this meeting. Wavy, new job is taking all of my time lately. Thank goodness for my handy dandy gold bagel membership. I was able to take a 15-minute break and listen to Uncle Bruce's trade alerts before my workday started today. There you go, buddy. Right on. Thank you for being a Gold Bagel member. Listening in on our pre-8:30 show every day for Gold Bagel members only. Please consider, every single one of you, please consider becoming one of these right here if you could. It helps me. It helps our channel and allows me to give you my impressions on what's already happening way before I start this show. And, well, if it makes you money, I'm a happy guy. Really am. SoFi 602. We're up 9 cents. Smart Rent's up 7 at $5. Matterport's up 2.5 to 402.5. The Dow's up 367. We got GameStop up $1.15 now. Oh, now we're only up 99 cents now. 127.16 on GameStop. So we're backing up a little bit here. AMC's up 29 cents. ATIP up 6.9 cents. Looks like it's around 184. Rocket Lab is up 14 to 414. Sixtair is up 37 to 1309. ME is up 6.5 to 242.5. And that's what I see right there. Okay. The Dow up 353 points right now. 127.41 on GameStop. Okay. Okay. All right. Well, we'll follow this market for a while here and see what it wants to do. Keep your eyes open on what's going on here. Home builder confidence dips to 2-year low of 67. Interestingly, there another one of those stats that just comes out from time to time. I'm going to take a look at something over here if I can get it to work. Mm. The VIX is down 2.3 to 30.39. This is a good indication, and it seems to be kind of a heads up for us that it's possible the market could go higher because the VIX is dropping. This could be it. I'm not going to guarantee it. It's still at 30.37. We can reverse this trend any old time. But the VIX is at 34. Now, I will also say that for the last number of days, the last 5 days, the VIX is at a higher level now than we were, a few days ago. This is the 15th of June. On the 9th, we were at 24. We were at 24.26. Then on the 10th, we moved up to 28, 29, and then on the end of the day, we're down to 27. Then on the 13th, on obviously Monday this week, 32.75, got up to 34, 35. And then what was that, the 13th, at one point about 35. And now we're at 30, 32. So we've backed off a lot from 30s to 35s to 32s, now to 30. So 30, 32 is the best level. But unfortunately, here's the reality of it. This is only the best level since the 13th, which is 2 days ago. It is nowhere near where we'd like to be. We need to be down another 3/4 of a point to get back down to the 10th of June, 5 days ago. And it's possible we'll get there, but we haven't yet done it. Okay. So we're going to have to keep an eye on that. In the last 3 months, the low has been around 1845 for the VIX and the high 3475, which is just where we were the other day. But that was also back in May. So just to let you in on that. For the last 6 months, the best level I see was like January 3rd, 16 something, 1656. The worst, 36 something, 36.55. March the 7th. Within 2 months, we went way up. And then we went down, and we went up again, we went down, and now we're at 30. So we'll watch for this. We'll keep an eye on all this. It is the market. It is the market, and that's all I can say about it. We're all watching the Fed. And I say to you that with the Fed announcement expected today, we may find that the announcement is exactly what the street is happy about, and everything is fine. The market will go higher. On the other hand, we might get a 0.5 point increase, and a percentage of people might go, we should have gone up 3/4 of a point. We really should have, and they're going to sell off because they feel that the Fed is too slow off the market. On the other hand, it goes up 3/4 of a point, and some people say they're going too fast, or they were saying a 0.5 point last week. Now they do 3/4 of a point. Things are worse, and they're not telling us the truth. And so here go the conspiracy theorists, and the market goes down anyway. It could all be baked in for a lower market. I don't know. All right. Hector, Uncle Bruce, I need to roll my 100s for July 1st. I'm looking at October 135s. Hector, you could look at that. Just wait and see what the afternoon brings us. And tomorrow. You don't have to make a move yet. It's June the 15th. You have a couple more weeks. Well, there's no rush. Shares could well be 106 in no time. And then a rollover to 110s would be a profitable rollover. You could get more money for a 110 and move up $10. So don't be in a hurry to go all the way up to 135s. I wouldn't be doing that right now. Thanks, everybody, from John. Let's see, what time is the Fed meeting? We find out at 2 o'clock. We find out at 2 o'clock what's going on from the Fed today. All right. The Dow right now is up 366. And We've got GameStop at 127.94, 128, no, 127.94, up 177 right now. Where we're not doing gloriously great. We're not doing terribly badly. We're just kind of up a little. That's the sentiment on the market. We're up a little, like 1.5%, kind of up a little. We're going to need a lot more than this. If we're going to have a barn burner of a couple of days coming up with a nice recovery and some real optimistic trading, we need more than this, but we're not getting it. Because I think the market is tentatively, nervously, and patiently waiting out 2 o'clock this afternoon. And they're also waiting to see what the ECB will be doing in the next few days. That was interesting today. The ECB had an emergency meeting. They'll be watching that. We're going to see how interest rates react. We'll see what's going on. Home builder confidence falls to a 2-year low. These are headlines. Interest rates right now. The U.S. 10-year note, 3.37. It was 3.5 overnight. 3.37. Germany is 1.58. 1.58. That's backed off from 1.7 something. 1.77. That's a fifth of a point. Italy has backed off a lot to 3.76. That's down from 4.1%. This is all because of ECB, not the Fed. Not the Fed. Euro is at 104.22, and that's almost unchanged now. It's given back all its gains. At one point, the euro got to 104.95, and it gave it all back. It's 104.22, and we're virtually unchanged on the day. The pound is at 120. What is that again, Bruce? 120.83. It's still up on the day. Got as high as 121.20, but it's now 120.83. So 4/10 of a penny has been given back, but it's still up 8/10 of a penny after yesterday's bloodbath. So a little better for the pound than the euro right now. The euro is giving back everything, and the yen is going lower against the US dollar again. The Dow right now up 376, S&P up 57, NASDAQ up 211. We're up 1.9% on NASDAQ, 1.5% on S&P, and 1.25% on the Dow. Oil down 75 cents a barrel in Texas, 118.22. That is the story. And I'm sticking to it. 127.91 on GameStop. It seems to be around a $1.70 to $2 gain right now on GameStop. Okay. Seems to be. I don't know how long it's going to last. Could it go higher? Yeah. Could it go lower? Yeah. I think the odds are going lower than higher. Yeah, I think so. I really think so. We shall see, everybody. We shall see. Thank you for all of you joining me today. Jennifer and I here from Vienna, Austria. Our last full day here. We're going to be on a train tomorrow all day from here to Zurich in Switzerland. I will not be on the air tomorrow. I'll be back on the air on Friday from Zurich. And I look forward to catching up with you for option expiry day on Friday from Zurich. And see what happens. If any of you would like to have a one-on-one heart-to-heart chat about what your future holds and all that, well, let me know. Send me an email, and I will see how we can squeeze you in for an hour, and we'll do a private chat as best we can. It's doable. Here's my address, bruceforman@hotmail.com, and would love to spend an hour with you and help you reflect on where you're at, where you're going, what life holds for you. It's a good session. It always is. Thank you, everybody. So look at retail expenditure way down lower than expectations. This may be a good sign the Fed won't hike rates too high. Not going to happen. Michael, I'm heavily debating writing sixes on SoFi for this Friday. I could pull in like 2,600, but I'm afraid that there will be no drop. Sell my house fast in Upper Marlboro. Michael, I'm dying to write on SoFi. I just don't know when. The Credit Savage. Well, being that it looks like they'll pull the rug today, I sold some 40 SoFi January 2023, $14 covered calls, and I got 26 cents for each. Well, SoFi hit 615, and it's pulling back already. Going to buy back at 16 cents. Easy money. Going to make a dime on 40 contracts, $400 profit. Puke Burb. That's an interesting name for a new member. I've been writing cash secured SPY puts since last year, but the price is so far below cost basis now that it's not generating income anymore. Do I keep holding? I'm scared SPY won't be back anytime soon. I don't know. Yeah, that's you got to get performance, no question about it. Cindy, I've been writing. I've been writing on SoFi today and yesterday. That's what Cindy's been doing. Well, SoFi now is $6. It's given up 15 cents. $6 last trade, up 6 cents. The Dow, 359 gain. The question is, during the day today, will the Dow have a dip that will take it down to like zero? Could that make Spire or SoFi, I should say, could that make SoFi go to 550? Then could the Dow go back up a couple of hundred, and then SoFi go back to 580 to 6? This is the question that some of these folks are asking themselves. They want to write calls and take advantage of premiums. It's a scary one because we're so cheap. 127.66, 127.50 on GameStop there I saw for a minute. We're only up about $1.30 something a share on GameStop. We seem to have run into some a little bit of selling, nothing crazy, but we're backing off just a, we're trading 545,000 on GameStop. Very quiet. 127.52 up $1.35, and that is a little below the halfway marker. Well, maybe at a little below the halfway mark. Yeah, well, we'll see what's going on. Time will tell. Definitely, time will tell. SmartRent 506 up 14. Matterport 401 up a penny. SoFi $6. Spire 149.5 up 7.5. GameStop 128.13 now. Just a titch better. AMC up 31 cents. ATIP up 11 to 188. Rocket Lab up 16 to 416. Sixtera up 34 to 1304. ME 244 up 8. Let's take a look at ME. The all-time low on ME here. ME's low 212. Right now 243. So a bit above the low of all time. The Dow right now is up 360 points. We seem to have popped up and stopped between 350 and 380. We seem to be here now. We've been kind of hanging around here for a little bit. I wonder if we're now going to pause and fluctuate down from here to come back to here. Well, what's going to happen? This will be interesting to see how the day traders play this now. The momentum traders have run it up, but it's not going higher. Now do we run back and forth from around here? That is the question, everybody. Sell my house in fast upper Marlboro. Cindy, what are you writing? I only have 600 shares. So there isn't much for a dime profit on 6 contracts. I make $60. I don't make any money there. That's the problem with really cheap paper. It makes it tough. SoFi, 598 last trade. 127.36 on GameStop. We're back under 128. We're up 119 now on GameStop. The Dow, 348, 12-point drop just in a few minutes. Maybe we're topping out a bit for the moment. We'll see. Stocks were gaining ahead of the Fed decision, but that has stopped. I think that has stopped. And now we're going to consolidate a little bit here. That's possible. It's possible. Hard to make $5 profit on a contract when the stock that you're writing contracts on is $5.95, like SoFi. Very difficult to make that kind of money, unfortunately. Let's see now, 126.79 on the GameStop, 127.08 here. We're breaking 127 now. We might be going lower. The low of the day, 123.64. This is the lowest level since the first run up in the morning. So we've given back all the gains we got in the first half hour, the first 45 minutes. It's all been given back, and now we're backing off at 126.83. 126.63. We're down. We're only up 46 cents on GameStop now. Okay. Just so you understand what we're dealing with here, a little more of a pullback coming. Is it a dramatic pullback between now and the Fed? Maybe not. Might be, we might be fluctuating between $2 and $5 either way here. It's after is what counts. So what's going to happen in those last few hours once the market digests this interest rate decision? Do they like it? Do they kind of like it? Do they not like it? Do they hate it? And all the talk around it, all the talk about the decision. That is the important part. That'll be the first hour after 2 o'clock. So from 2 to 3, watch out. Volatility supreme, could be everywhere. So I don't know if any of you were able to write contracts on GameStop today when it was 130. It didn't last long there, but a couple of times. But if you did, and it drops to 120 today, you could have a trade. Beautiful, right? What's wrong with that? Nothing is wrong with that. Well, we'll see what happens. There you have it. Okay, 126.79, 126.84, just under $127 per share, all of you. All right, there it is. 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 Now, I'm going to save my voice as much as I can. And I'm going to shut down this show here so I can get just some time off and tend to it. I'll be back on today for the final hour at 3 o'clock Eastern. So that'll be after the rate decision is out. It all depends on what happens. If everything goes stupid at 2 o'clock, I might come on early. But we'll see what happens. You never know when I come back on, but just schedule it for 3. But if I come on earlier, then I'm on earlier. But I thank you all for being here today. Thank you for tolerating the old man and his losing voice. It is what it is. Cindy says, you know what? I sold a $6 strike for $31. 7 contracts at an average of about 25 a contract. There you go. There you go. I bought some puts. We shall see here. Splair, then good luck to you all today, says Splair. Yes, indeed. Good luck to everybody. 126.26 on GameStop. We're only up a dime now. So it's definitely coming off quickly. It is beginning to back off again. The Dow's up 333. A slight pullback here and there. I'll see if that's got more to it. 126.50 on GameStop. More selling coming in, I think, on it. 587,000 volume. It's a nothing burger, man. This is a nothing burger. Yeah. To lose a couple of bucks from here wouldn't take much. I mean, it was 123.64 already. So, it can lose $3 from here, be down to 270 a share. No big deal. Try to drink a lot of tea and water, Bruce. Do something, man. Help yourself. Save yourself. Well, do what I can. It's hard. It's so difficult. It's a hard life in Vienna. It's really a tough life in Vienna. It's not. It's not a hard life in Vienna. I'm lying. It's wonderful here. It's really nice. Don't tell anybody, but it's really nice in Vienna. Okay, I'll see you at 3 o'clock. Bye for now.